Welcome to the Infinite Wealth Podcast, where we teach clients how to build wealth and create passive income without the risk of Wall Street.
Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. We just finished wrapping up our conversation with what I would say would probably be two of the brightest guys that I know in the tax planning entity formation arena, which is we spoke to Todd Mardis, which was president of Capital Preservation Services, along with tax attorney Walt Dallas. And really, really good information that I thought was valuable. Specifically is the reason that I even like these guys, we've been talking to them for probably over the last year or so, is that one of the issues that I have, not issues, but one of the areas of concern that I've seen with just accountants in general is I was always kind of put them in two different categories is when talking to clients is I'll say 95% of CPAs are historians, which means they look at what you've done over the last 12 months and they simply report it. And to find a CPA that is proactive and forward thinking and is providing strategies that you can implement to lower that tax liability is usually pretty difficult. And so what I'll tell clients is if you can find that client, that CPA, hang on to them, right? But what CPS does is they come in and they can fill that void for a lot of clients where kind of touching on the second point that I'll add is that if you're a business owner, as most business owners know or feel like there's something more to what they're doing, right? Is they don't feel like they're doing enough. Is you go and you meet with the CPA and you kind of report and you pay those taxes every single year, but that's such a pain point on their end is that there's always something else that they could be doing. And this is where these guys come in. So great conversation with these guys. It's just a general introduction, and I think it's going to be very valuable to a lot of our business owner clients.
What I found is with your CPAs or like in your accountant, there's really three areas that you're looking to get help from. One is the actual preparing of the tax return. One is being proactive in tax planning, and then third is going to be audit defense. Each one of those categories, I believe, is a very distinct skill, and it's very difficult to be an expert in three areas. You know, the old saying is jack of all trades, masters of none, right? These guys are a master in the tax planning. And a couple of things I liked about them is that they say that they don't run from the tax code. They actually run to the tax code. They're using the tax code as their friend. When they determine if a strategy is going to work or not, the litmus test is not whether a CPA is going to say you can or can't. They're going to go to the tax code and determine for themselves if whether they can or can't. And what here's another example here is there's one tax code, but it's really designed more for taking deductions. And for people who are, their sole income is a W-2, man,
very difficult.
Very difficult to take advantage of these tax strategies. So if you are a W-2, that's where we need to look at maybe creating your own business, which we've talked about. And also real estate has some tax advantages. But if you are a business owner and you have some control of how your income is reported, you're going to get a lot of information out of this episode. And after you listen to it, if you're kind of wondering if this works for you or if it doesn't, schedule a 15-minute call with Cameron or I, and we will determine whether some of these strategies are for you. And if they are, then we will talk about the next step.
Awesome. Enjoy this episode.
Take care.
Have a great day. All right. Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host, Anthony Faso. Anthony, how are you today?
I am doing good today. Looking forward to our meeting as we talk about some of the things that your CPA is not telling you.
I'm excited too. Today with us, we've got Todd Mardis, president of Capital Preservation Services, as well as Walt Dallas, tax attorney with CPS as well. Morning, gentlemen.
Good morning. Glad to be here.
Absolutely. If you guys could you guys start off giving us a little bit of background on each of you, and then we'll dive right into questions?
Well, my name is Walt Dallas. My full name is Thomas Walton Dallas. I've been practicing a little over 30 years. I've done a lot of estate planning, mostly in the Southeast, a lot of large estates, and connected with the large estates, I did a lot of income tax planning on those. And so I did those with a lot of the family limited partnership constructs, and we would do a corporate general partner, and we would make that a little C corporation. We do a lot of our income tax planning through that. We've been teamed up with Todd, I guess, about 10 years ago on various clients. He referred to me. And so we worked well together, and we've had a good endeavor about trying to bring those income tax saving concepts to kind of more people that can utilize those structures.
Great.
Yeah, I'm Todd Mardis, President of Capital Preservation Services. I started in the financial services industry in 1993 and very quickly gravitated to the kind of affluent small business owner, a lot of service providers, a lot of professional markets. And over the years, did a lot of estate planning, wealth accumulation, and one of the main things that I knew was missing was how could we help our clients reduce their income tax liability and free up more money for them to either invest back in their business or give, on a charitable basis, or accumulate wealth for their retirement. And so in 2008, Walt and I partnered up. I started Capital Preservation Services in 2004, but in 2008, we as a firm dedicated our practice 100% to tax reduction strategies, comprehensive planning, and really everything that we do begins and ends with a tax attorney. Walt and his group of attorneys are able to do things that CPAs can't do, simply because CPAs typically don't want to violate the law and practice law. So it takes an attorney to draft documents, create corporate minutes, and things of that nature. So we've been partnered up, as he said, for 10, 11 years, probably have 600 or 700 plans on the books, probably have 400 or so individuals who are in our audit defense plan, which I'm sure we'll talk about in a little while, which is an ongoing relational type program with all of our clients across the country.
Great. So give us an overview of what it is that you guys do.
Yeah, we go out and we meet with an individual, and it's pretty simple. We take a look at their current corporate structures, current income. We take a snapshot, if you will, of their situation from a business standpoint. Again, looking at corporate as well as personal returns. From there, we partner with our law firm in creating a plan or design to use multiple corporate structures, to deploy multiple strategies to help them reduce their taxes. We basically take their income in the snapshot in which they showed us, and then we move that same income over into a separate structure that our attorneys would create, again, deploying those specific strategies. And from there, the client gets to see firsthand, had they had us as their advisors, what their tax liability would be versus what it actually was.
Can you give us a general description of the types of clients you work with, whether that's income amount, something like that?
Right. Our general clients are going to be anywhere from $400 up to about $2 million of taxable income. And that seems to be the parameters of that. Generally, it's going to be someone who can control the way they're paid, control their income, because that allows us to implement the appropriate structures that we can use to save their income taxes. So also consistency of income is a plus. So a lot of our clients have a consistent level of income. So the main issues, number one, you can control the way you're paid. Number two, you make at least $400,000 of taxable income. And number three, you have enough business sense to understand what we do and how we work.
Yeah, and that's a great point, because some clients we work with, let's say they're in a big partnership, they really may not understand how they're compensated. They just know they get a check at the end of the month. Those individuals may need us, but they just don't have the internal knowledge of the business to be able to use us and to implement properly. So Walt made a good point. These are usually people who have a knowledge of their business. They understand how the money flows, where it comes from. They understand, what their AGI is, what their deductions are. So it doesn't have to be a client who has the knowledge of a CPA, but they do need to have an in-depth knowledge of their business.
Great. So with most of these clients, can they keep their current CPA, or do you guys do taxes as well?
If our clients are comfortable with their CPA and have a good relationship with them, we encourage them to stay with their CPA because that they can build off that relationship. What we have found that many of our CPA friends may have a handful of clients that are in the categories that we cater to, the over $400,000 taxable income arena. And since they only have a handful of those clients, they're not familiar with the type of strategies that we use. Mm-hmm. And so many times, once we implement the sort of strategies to use it, the CPA that our client has, maybe feel uncomfortable with what we do and how it flows and things like that. And we have created with Todd's guidance, Summit Accounting has been created that will actually perform all the tax return functions and accounting and also payroll tax administration. So that's been a big boon for us. So we have the capability of handling all their accounting needs, but we're not out there trying to push it on a client that doesn't want it. And if they have a good relationship with it, we build off that relationship because that allows us to include that CPA in our process.
Hey, Anthony, and you know this from working with us in the past, we won't vet what we do with their CPA because over time we've just seen all the problems that occur with them saying, hey, I need to get my CPA involved in this. And we don't do that, because the CPA has probably told the client, hey, you're doing everything you can to reduce your taxes. And then we come in and say, hey, you're not doing everything you can do. So there's an automatic posture that takes place. Mm-hmm. And then the biggest thing is they really don't understand what we do because it takes a tax attorney to be able to design and implement this. Everything we do and use is legislatively, sound and backed by tax code. We don't make up tax codes and we don't amend tax codes to fit our plan. Most CPAs, and again, Anthony, you have an accounting background as a CPA. You may have 300 to 400 clients, right? And that's a pretty average number of clients for a CPA to be able to take care of. You're doing bookkeeping, auditing, you're doing a lot of other things, but we rarely see a CPA, and we have clients from the East Coast to the West Coast, but rarely see a CPA who has 300 or 400 clients that are in the category of our clients. And so unfortunately what happens is the guy making $80,000 is many times getting a lot of the same recommendations as the guy who makes $800,000. The 80,000 guy's right where he needs to be from a recommendation standpoint, from a strategy standpoint. But the $800,000 income can and should be deploying more to reduce their taxes than the individual making 80,000.
Todd, I've heard you say this previously in some of the meetings that we've had frame this is that a lot of CPAs will say, I think that's a little too, or I try to be more conservative as opposed to being aggressive. But you've got kind of a saying, whereas you say we kind of run to the tax code, not from it. Could you maybe add on that a little bit or expand on it? Yeah,
it's exactly what we do. We've had numerous meetings with Walt and I with CPAs, and we'll quote a tax code, and the CPA will say, I don't read tax codes. And Walt and I look at each other like, did he really or she really just say that? We run to the tax code and say, what does Congress pass that you as a business owner can do to legally reduce your taxes? What we see many times is our clients will say, hey, Walt, Todd, I took something like this similar to my CPA that I read out of a journal or a trade journal. And he or she told me, I'm not sure the IRS would like that. And so they kind of push the client away from doing anything like that. Well, the IRS doesn't like anything you do, right? That reduces your taxes. So that can't be the bar. The bar needs to be, is it legal? Am I doing it in the right manner? Am I documenting properly? And are my ducks in a row? And again, I think you've heard me say this in the past, we believe everyone should pay taxes. And our clients still pay a lot in taxes. But if there's ways to legally reduce your taxes by 10 to 15%, 20%, we think you should take advantage of it.
You've mentioned CPAs and you've also mentioned tax attorneys. Maybe could you give our listeners maybe a working definition of the difference between the two of those?
I sure can. A
Thanks,
tax attorney is going to read the law, understand the law, and apply the law to the facts from the clients. And the tax attorney is generally not going to get into the filing of the return. Normally, the job of the CPA is to take the numbers from the bookkeeper, massage the numbers, make sure they're correct, and put those numbers on the tax return. And that's a big job because the tax return preparation segment is extremely important, extremely complex. So I never want to minimize what our CPA friends do because what they do is a very important part of the process. Another part of the process that we do as tax attorneys is the full implementation of the plan. Because once we have the plan, the blueprint, the operational instructions and things like that, we then have to educate the client and tell the client how to operate the particular plan we designed for that client. It doesn't stop there though. Some of the people out in the market will say, hey, here's your plan, go do it. We don't do that. We take extreme pride in making sure our clients understand what they're doing. Also, ours is a turnkey project in that if there's a corporation to fund, to create, we'll create it. We'll help you fund it. We'll help you open up the bank account. We'll get the tax ID number. We'll do whatever it takes to fully implement that plan so the client will not be stuck there on December 31 going, I have no clue how this works. All of our clients have the opportunity to know how it works from top to bottom. And if they don't participate, and if they don't get into it, we fire them. We do not let them participate in our defense plan. We want knowledgeable clients that are doing a good job on their documentation and running our documentation system like it's supposed to. So if they do fall into the audit situation, they're going to win and they're going to have a very, very good story to tell.
So what type of accountability do you guys have there? Because my experience is that typically business owners are not very good with documentation, whereas CPAs are, or vice versa, right? Or tax attorneys. Could you kind of tell us the expectation that you guys have of business owners?
Yeah, and it's really probably the most important part of our planning process. If I had to pick one component, there's a saying: if you get audited, there's really three things that matter: documentation. Defense plan. We require a client to be available for 2 meetings per year, and we've labeled these the annual kickoff meeting, and that one usually takes place somewhere quarter. And in that meeting, our attorneys and CPAs are looking back and seeing what the client did well, what the client maybe have missed, and kind of using a metrics to determine how much money they save using each particular strategy. And we check the documentation and make sure they're keeping good records. The second meeting, and probably the funnest meeting for the clients, is the end of the year or fiscal year end meeting. And this is where we prepare for taxes, tax liabilities for that end of year. And during that meeting, we're also looking at what the client has done, what the client has left that they could do, any new strategies. For example, this year we've had multiple meetings with professionals to see if they qualified for the 199A flow-through deduction. And that's been a big thing for a lot of our business owners, is just having that continual relationship in planning, and again, looking at the documentation again to make sure they're keeping good records. We provide them with what's called a document assistance program. DAP is what we refer to it. And it's exactly what you refer to. Most people are not good at documenting because nobody wants to do it, right? You go to dinner, it's a business meeting, you keep that receipt, you hope it ends up in a file somewhere, right? And doesn't end up, going to the cleaners and running through dry cleaning. So we have a system where we send out basically timesheets and documentation sheets every Sunday for our clients, and that takes about 3 to 5 minutes to fill out. We've also created portals for the clients to download their receipts to, and that allows them to categorize them as personal or business meetings. We teach the client how to write on a receipt, who attended, what the meeting was about, what the topics discussed were. So it's a turnkey system, not only from the creation of the entities, but it's turnkey in helping them become good at keeping records. And again, the IRS typically can't disprove something. For example, if you have a receipt, and I said I was at dinner with Walt and we discussed, strategic planning for the following year, that's going to be really hard for the IRS to disprove. However, if I just have a receipt and I tell them it was dinner with Walt and we were discussing this or that, it's hard for me to prove it, right? It's easy for them to disprove that. So that's just part of the process. And we feel like that may be the one thing that puts clients in a position to defend themselves the best in the case they're ever tested by the IRS.
Yeah, great. What I'd like to add that you hit the nail on the head. Documentation is key. And one thing people may not realize when, like in a criminal case, if you commit a crime, the burden of proof is on the government to prove that you did it. In regards to a tax audit, it's the exact opposite. The burden of proof is on you to prove that you have these valid deductions. But also, I think one thing that is important that I found actually being in an audit, most of the auditors expect the person not to have any sort of documentation. Maybe they have this shoebox or maybe a list, or it's going to be very difficult for them to prove it. But what I found is when somebody comes in prepared and the first couple expenses or deductions they're looking at, they see that this individual is keeping track of their documentation, have their ducks in a row. They have a trust level where they're typically not going to go deeper. That these guys are very busy. They have a lot of cases, and if you have that proper documentation, you're going to make their life easier, and then they're going to be able to finish up this case and go on to the next one.
For sure.
That's good.
Totally agree.
The word audit is a very scary word for a lot of business owners. Can you tell us a little bit about, you said you gave us kind of the overview of the audit defense plan, but what actually happens if one of your clients does become audited? Are they going it alone? Or are you guys going in there with them? Could you expand on that a little bit?
Yeah, we'll go it for them because many times our clients don't even have to come see the auditor. That's normally the way it happens. So the first step of that is the client will receive an audit letter from the IRS and says generally what they're interested in and to respond back within a certain period of time. And then at that point in time, we normally get a copy of that from the client, and we'll prepare powers of attorney and have our attorneys send that into the auditor. And at that point in time, we have the ability to speak for the client. So we get in the process, and then at that point in time, it becomes very document intensive. So after the initial conference, normally the agent will send us a request for information, and we'll respond to that with the appropriate information. That's where it's really keen on us to have the documents organized. Now, if they've done our system correctly, it should be organized already. So one of the things we'll do is we'll take a look at it and say, okay, how's it going? Now, if we've done their audit review plans correctly, we've already done this. So this is a second look at it to make sure they're in the appropriate format. And then we'll put the information over to the IRS auditor. The auditor will review it and then issue a report. Usually that takes 9 to 10 months. It's just amazing how slow they are sometimes because they are busy. And then if we agree with the audit, it's over. If there's any amount due, the client will pay the amounts due. If there's no amounts due, we'll have a clean audit letter. If we disagree with findings, we'll file and we'll appeal to the appeals officer within the IRS, and we'll pursue that. And if we don't, most of the matters are settled, 95% of the matters are settled at the appeals level. So there's a very good settlement rate at that point in time. And of course, if you know the system, it's much easier to do that. And then if we don't agree with that, we'll do a tax court petition where we'll appeal those items to tax court. And the nice thing about tax court is you don't have to pay the tax to go to the tax court. And number two, the tax court judges are very knowledgeable. These are tax attorneys. So it's nice that you talk to someone that really understands the substantive nature of the law.
Yeah, and it's really important that we get involved as soon as possible with our clients in the event of an audit. Local auditor. We also have, some success at the local level, but more success at the appeals. And again, every level that you go up a ring in sophistication. And so you may have a simple C Corp return, and there's very few of those, being done today. And it may be the first or second one that a young auditor's ever seen, and they don't understand it. So the higher you go, the better. The other thing, in Anthony, you chime in if you agree. While no one wants to be audited, these people are pretty normal, people. They're nice people. They're not out trying to, hang you, trick you. They're doing their job. They're very well-mannered people. I laugh and I tell everyone, you think of being audited, you think of, two-headed monsters with red eyes coming after you.
Yeah.
That's not the case. The other thing that's important to realize is there's two different types of tax planning, and I'm using planning loosely. There's tax avoidance tax planning, which is what we do. And then there's tax evasion. Tax evasion is where you're really not reporting your income, and you go to jail for tax evasion, right? That's where you get in trouble. Real simple fact of, hey, I haven't filed my tax return in 4, 5, 6 years. That's tax evasion, or not reporting big sums of money. But tax avoidance is using corporate structures and using strategies that Congress has passed. And if you ever take a look at the tax code, it's a book about this thick, and it basically about 2.5 inches thick. And in it, it's primarily ways to create deductions for business owners.
So on that, without giving away all of the secret sauce, but I know I've been in multiple meetings with you guys, but you want to share maybe some things that you do look at, maybe some things that people didn't know that they could deduct.
Well, there's about 20, 25 strategies that we continue to use because they fit different situations. So that's one of the things that we do on the front end is to figure out which items fit which structure. The first plan that I did was for a client 30 years ago, and we had a limited partnership and we had a corporate general partner. We should do limited partnerships back then because we had not heard of LLCs. They had not been created. And so we would use the general partnership as a C corporation. And we would have the family members as the employees. A lot of times it was a family business. And so we did a medical plan. And so we actually had medical expenses be deducted 100% on the front end without having to go above a certain adjusted gross income limitation like you do now. So that was a great example of all of a sudden you've got the ability to deduct braces, prescription drugs, co-payments, things like that. Of course, your medical expenses, your insurance expenses are already deducted anyway. And I'm talking about the things over and above that. So many times we'll get a client and we'll be talking to them. They'll say, well, we're fixing to have a baby. We're like, congratulations, that's great. We better form your corporation tomorrow and then get those done.
Yeah, and Anthony, there are a lot of different strategies. I mean, we create ways to create tax-free rental income, given you use a certain strategy that's available to you for 14 times a year. We show you how to be able to deduct some meals that you may not be able to deduct today. And it all revolves around the attorneys creating the right corporate structures. If you said, hey, what's the key to your success at Capital Preservation Services? I would say it's knowing how to use all the different corporate structures available to the business owner. And each one of those has advantages and disadvantages, meaning there's certain things you can do in a flow-through entity that you can't do in a C Corp and vice versa. And there's times when sole proprietorships have advantages. And we all know that those entities exist and that none of them are extinct, right? There's not one that's no longer available because it's so bad. So you simply say, do you think as a business owner, you're better off having multiple corporate structures that have advantages in them versus having one corporate structure? Now, once you get past that, then you get into 7701, economic substance and reasonableness 162. And those, again, are where the CPA kind of gets nervous because they really don't understand that many times whereas our attorneys are able to navigate those issues very well. But it really is just knowing which corporate structures best fit our clients and then deploying the strategies that are available to those corporate structures.
Hey, let me jump into it because I think Todd makes a really good point that I want to emphasize, and that's when we get to the client meeting stage and we have maybe a financial advisor or a CPA in the room and we're telling them what we do and how the plan all fits together. Many times within the meeting, the CPA will turn to the client and say, well, I don't know why they're so good because I do all that. What does the client do? The client looks at him and says, you've been doing my taxes for 20 years and you never said that.
Yeah.
What's the deal? So the secret sauce, our secret sauce, is the ability to understand the strategies, which a lot of people know already, but then combine them together so it fits the plan of the client. So it helps the client and it integrates with the client and all the cash flows work and everything works. So when you get to that bottom line on the tax return, the client's saving a lot of money.
Yeah, what I like to add, one example that really opened my eyes, and I've even said this, I've learned more about tax planning working with you guys the last couple of years than I did over the prior 18 years of being a CPA. I mean, I'm just being honest. I'm even throwing myself under the bus. And really, Todd, as you had briefly did an overview about that tax strategy of creating tax-free rental income, that to me is is a prime example of the way that CPAs are thinking. I was aware of that strategy, but the way that I interpreted it, that strategy may save me like a deduction of about $3,000. But by working with you, I realized that same strategy could actually be worth $36,000 to $40,000 of tax-free income. And I think that's a prime example of something that CPAs, they don't know exactly what they don't know. Like we hear about these strategies, but really it's being able to know how to maximize the actual tax law. And what I've heard some of these strategies before. Some of them I was actually using before, but to be honest, I wasn't. Oh, I guess this is being recorded, but I
Be careful.
My deduction or my paperwork as correctly as I should have. And as you guys said, documentation is extremely important. But I've never seen anybody or any firm who's been able to package all these different strategies. Because as Todd told me before, each one of these strategies is not a home run, but each one is at least a base hit. Maybe it's a double. And if you add these on top of each other, you add up all these base hits, then each, after you got the bases loaded, each hit is going to be a run. Or a point. So you guys have compiled all these strategies and have the ability to not only teach them, but more importantly, make sure it's documented. So if the IRS does come, the client's going to be protected.
Yeah, and I'll throw a little lifeline to our CPA friends, because we certainly, as Walt said, appreciate CPAs and know that they have a very high level skill set. But I'll quote a client of mine who said, at the end of the day, whether I pay $60,000 or $160,000, I'm paying my CPA $2,400, right? That's what I'm paying him. So if so there's not, a tremendous amount of time in a year for a CPA many times to go study these, figure out how to use some of these strategies, how to document them. And again, you got to have the tax attorney in conjunction with the tax codes and the corporate structures. So that's what we see many times is our CPAs are as bright as anyone in the world. They just don't have the time, nor is there a huge incentive for them to study these tax codes. Again, they may have 300 or 400 clients, and 10 of them could benefit from a strategy.
You kind of touched on it there. You said I know you're just ballparking and kind of relaying a story there, but CPAs get paid $2,400 a year or whatever. Is how do you guys make money?
Well, we only make money if we're going to do a benefit for the client. So we're compensated based upon the value we bring to the client. And so we'll calculate the amount of taxes that could be saved if they implemented these strategies, and we'll see how they fit into our plan. Sometimes there's no fit, and we'll go to the client and say there's no fit. It's just we can't do anything for you. That is the case a lot of times in W-2 type employees. If someone doesn't own their business or just a W-2, we have a limited number of things that we can do for that particular person. But based upon the complexity and the value of the services, the amount of income, we do an estimation of what we think that value should be for the client, and we'll charge that client that particular amount.
And it's not based on tax savings. It's more based on overall planning, the number of entities, structures, strategies deployed. But on average, our clients are going to pay a pretty substantial fee up front. So if we've identified $80,000 to $90,000 a year of tax savings, and that's a recurring number, they'll save $80,000 to $90,000 every year. Their fee may be $30,000, $35,000, and that's a fee that they'll be paid for out of their business. So it's a break even for them, or actually they're ahead the first year. Going forward, to be in our audit defense plan, we charge 20% of whatever the first year fee. So in that example, that individual in the second year would pay us $6,000 to, again, save roughly $80,000 in taxes. And for that $6,000, we're filing minutes and filings with the state. We're having 2 mandatory meetings a year with the clients, which we talked about, the fiscal year kickoff, the kickoff meeting and the fiscal year end meeting. We're amending their plan if legislation changes anything that we've done. We also they have free access to a law firm from a question standpoint. And if we get audited, they pay no more than the $6,000 for us to defend the audit. So the client wins in the first year. But in the second year, they're certainly playing with house money when they're saving $80,000 to $90,000 and paying us $6,000.
And I want to jump in as a testament to that plan. Our renewal rate's about 95% from year to year, and that's where the clients are seeing the value for those annual meetings and being plugged into us. We're coming up with additional strategies that they can do based upon changes in law, changing their situation, and how the law matches up with them. So we've seen a keen appreciation from our clients for the value of the audit defense plan.
So just to recap, like in that example, you may have saved somebody about $80,000, and if their fee that first year is $30,000, then each year it's $6,000. So in essence, over 3 years, the fees are about $42,000. And $80,000 over 3 years is $240,000.
That would be pretty typical.
Okay.
That'd be pretty typical.
And I would.
And just to stress one thing, we of the people who do not renew, probably half of those our firm fires as clients. They get a registered letter saying we terminate our relationship, simply because we can't have that liability of defending audits if we don't know the client's following the plan, and it's for their benefit as well as ours. I'm sorry I interrupted you, Anthony.
Oh, no, it's okay. Now that fee is for tax and legal advice, so I would assume that's tax deductible.
That's correct. It's tax deductible. There are some startup expenses we have to manage to make sure they fit within the code, but in general, yeah, they're going to be tax deductible.
Yeah, and so not to get too in depth, but Anthony, for that fee, we have an appraisal done to determine fair market value on the rental strategy that we use, and that's a couple of $1,000s. We also have a relationship with several vendors who provide marketing blueprints for our clients to help them grow their business. Again, our motto is earn more, keep more. When we create multiple corporations, they have to be viable in real companies. And so we help validate that with the use of outside marketing vendors. And then the biggest, obviously, cost is to the legal side of creating and having tax attorneys involved in the process.
Todd, one thing that you had shared with me the other day is one of the many strategies you have is being able to deduct additional meals that maybe you were going to spend anyways, and then you made a comment that that food tastes better if you can deduct it, or there was something. I'm probably doing it a disservice.
No, absolutely, that's right. It tastes better if you can deduct it, and it tastes better if somebody else prepared it. So I mean, yeah.
Awesome. So if any listeners, if you are wondering if this strategy, if you're going to qualify, or if this is going to be able to help you, what we'd recommend you do is let's set up a 15-minute phone call with Cameron and I. We're kind of get a little bit of information from you. You feel free to ask us some information. We're kind of see if you're a good fit. If you're a good fit, then we'll get some information from you and schedule a more in-depth meeting and kind of go into more detail where I've seen the reports. Well, Todd will say, okay, here's what you're on track to pay without us. With us, it's going to be this much less. Here's the fee. And obviously you'd only move forward if you're going to save more money than you are spending right now. But it's a very good independent reflection of what you're paying now and what you have the ability to pay going forward.
Correct.
Awesome. No, I was just going to say thanks, gentlemen. I appreciate your time. And last thing I'll kind of leave here with is that any business owners that are listening is you talk to a business owner, typically they always are taxes are such a pain point for them is they go and they talk to their CPA and they feel like they're doing everything. But at the end of the day, they always kind of have that underlying feeling that there's more to it, that there's more that they could be doing. And that's where I see you guys coming in and just kind of filling that void for our business owners. So thank you guys. I appreciate it.
Yeah. And that's a great point. Most of our clients say that very thing to us. Hey, we had a call last week with a individual in Minnesota and is in the healthcare industry, or actually dental industry. And he said, I always knew you guys existed. I didn't know where you were or how to find you. So no, we appreciate you guys having us, and as you know, your name, Infinite Wealth, the name of your business. It's a lot easier to create wealth if you can redirect some of those dollars that have been going out the door back to your family.
Awesome. Thanks for joining us, gentlemen. Appreciate it.
Thank y'all.
Thank you.
Thanks for listening, and be sure to subscribe so you don't miss out on the next episode. Also, check out our website, infinitewealthconsultants.com, to find our podcast along with other additional resources.